Here we have a CPI case study. I should have posted this like yesterday because we had CPI today. But here's a case study. This is February 14th, 2023. These are just my interpretations on price. Let's get straight into it. So here we have a 15-minute chart. We have initial CPI gets released. Not trying to trade that at all. Just looking at what happens and see where liquidity is. So right here, we initially trade up to a new day opening gap. And then we put this low. This should say news low. And look at what we're trading into. We're trading into the old high here. An old daily high. We're also trading to that news low. We're putting a low in here, and then we're immediately trading back higher up to here, up into this wick here, and then we're trading back lower. Notice how fair value gap in, fair value gap out, a balanced price range forms. We respect that a new day opening gap, trade lower, sell size engaged. We form an SMT here. Smart money's accumulating that, and then they're going to distribute that for the rest of the daily range. And here, change say delivery on the 15-minute. Balance price frame gets formed within these wicks. We're probably not going to trade lower at this point because of the SMT. And now we see displacement, 15-minute BISI with new day opening gap right there. Trading higher up into almost this new day opening gap right here. That's this box right there. And also, we're referring to this new week opening gap as well. That's the green box. Here's a 5-minute chart. Here we have initial news high, news low. And here, the news low gets targeted first. And then we trade back up to almost the news high. But look, cost of approach of this 5-minute wick is permitting price to trade up to that. I didn't see. I kind of feel like I should have checked again to see if we had SMT here. I feel like we didn't. But look at the bodies right there. Consequent encroachment. Mohawk trades to the new day opening gap. And this new day opening gap gets perfectly priced right there. Then we form a balanced price range right here. That gets formed. Then we trade lower to that 15-minute cost of encroachment right there. Trade back up into a new day opening gap. It's now a premium array. We're respecting that. And then we trade lower once more to this low right here. After trading this SIBI. And then we're trading higher throughout the rest of the day. Smart money's accumulated this and riding this throughout the rest of the day. And there we have that. We have a low that gets taken right there. Old new day opening gap as well. Look at the bodies. The wicks are doing the damage. And we're trading higher. And here is the 2-minute chart right around after that news gets released. Notice here, this initial doing range, we trade lower, showing us we have like a market structure shift. That's hitting the cards. Look at this beautiful delivery. CE of that, also into this. What is that? Balanced price range. Then we're trading lower. And this is a setup that I've noticed a little bit is during 9:30 to 10 a.m. we'll have a breaker that gets traded to sometimes as an opportunity. Like if it's a sharp reversal like we have here, kind of, there will be a unicorn. In this case, we don't really have a fair value gap here, but here we have a breaker that gets traded into right there. So there's the breaker within the first 30 minutes that gets traded into. Then we're trading higher. True day access support right there. Buy side of balance right there. We're trading higher, cost of encroachment. And here, what do we have? Change say delivery on the 2-minute. And we're displacing lower. Below true day. The black line is true day. That's going to act as premium in discount. We're trading lower, back up into here. Might have cost of encroachment of that wick. We're definitely respecting with the body. We're trading lower one time. And here is the lunch hour. Who's been profitable right now? Buy side. Shorts have. So we're going to reprice to buy side liquidity. We have smooth edges formed right here. After taking sell side, we have a change state delivery within that 1:30 hour. We could probably reasonably expect to see some form of retracement into this during that lunch hour. And it's just beautiful. It's beautiful to see the lunch macro do exactly what it's coded to do at a certain time of the day. When else would this be expected during lunch hour? We have a BISI 2-minute, inversion 2-minute, sell stops accumulated. We're trading higher. New week opening gap is also getting traded to there as well. And here is throughout the rest of the day. Here we have 1:30 starts the PM session. Draw that out. We get manipulation below that. We enter a discount. We enter below these lows. We're in a discount. New day opening gap. We don't respect it perfectly. We mohawk out of that into the BISI. So we trade into that. And what is this? We're trading higher. What is this? Breaker right here. We trade above that breaker. Back down. Beautiful. That's cost of approach of that. And also, I think that was on the 5-minute. I didn't I didn't. Okay, I failed to notice this, but like, look at this order block. This is the highest quality order block. It's a big, beefy down close candle. We sweep, we take liquidity, and we also engage imbalance, and we trade higher with displacement as well. We create a fair value gap and a fair value gap there. This checks off all the criteria, in my opinion, for a high quality order block, and that's what we're trading into here. Perfect right there. Where are we mohawking to? The breaker. I'm using the body for this breaker right here. We trade higher. We're in a premium. We're above 130 open. We're taking buy side, and then buy side once again. 350 macro starts in spools, and we close off that low into the 5-minute BISI right there. So 350 trades off the high. That's when the liquidity is going to inject into the market. And here's that end of the day. Here's that PM session. Anyways, that's enough for this case study. Hopefully you all have a good one, and I'll see you all in the next one.